Hello everyone, I am Emmanuel and I am so glad you are here on this channel today. You will find a quick description on the channel's focus, so kindly hit the subscribe button and turn on the notification bell so you miss out on any of our latest content. So not to waste most of your time, let's dive in. Thank you so much. Thank you so much and welcome to Sterling FS Trading Community. Watching this video to the end will help you know the terminologies of trading, terms like pips, leverage, margin, and spread, and lot size, and understanding market dynamics. So I want to use this opportunity to shout out to my existing members, people that have been supporting me. I really want to shout out to you guys. I want to shout out to the people that just joined me this year. I really want to shout out to you guys. So let's dive in. So what are we talking about? Forex Trading Unlimited Guide, Beginner Series episode. You know what I'm talking about. And this is a guide from Sterling FS Trading Community. So we are talking about terminologies, confusion, and understanding market dynamics. So terminology confusion, beginner might be struggling with terms like pips, leverage, margin, broker and spread, lot size, types of brokers. So you can just take your time and go through this slide and actually pick the things that are very, very important. You get my point? So I want to use this opportunity to remind people that have not really watched the previous video on that's the first episode. The importance of creating this by series is really documenting my process of how I started and how I started and where I am now. So this is a beginner's series guide. So it is advised for you to go to watch, like just like you're watching a movie, you watch it episode by episode to understand. So I'm actually breaking down my experience in forex trading, and I bet you will not like to miss out on any opportunity. You will not like to miss out on any series episode. So that's why I'm actually like telling you to go back to watch each episode. At least each episode will teach you some particular things. So let's dive in. So what is pips? You probably heard terms like pips, points, pipettes, and lots. So you can actually go through these slides, and I want you to take note of this. Take your time with this information as it is required knowledge for all forex traders. Do not even think about trading until you are comfortable with pips, values, and calculating profit and loss. They are vital informations, but they are very, very necessary. Like they are basic informations, but they are very, very important. So the unit of measurement to express the change in value between two currencies is called a pip. That's the exchange rate between two currencies is called a pip. So if USSD move from 1.1050 1.1050 to 1.1051, that is 0.001 USD rise in value is 1 pip. So this is the difference. This 1 pip is the difference. Do you get my point? So that is how you go through it. And a pip is actually the last decimal place of a price quote. So these are very important. So you just need to go through this and really understand what I'm talking about. So there are two types of decimal points. Just like most pairs go out to 4 decimal places, but there are some expectations like expectations like Japanese pairs. They go out to 2 decimal points. So you can actually see them just like USD slash yen. It is 0.01. That's how you calculate that one. So what is pipettes? So they are four. They are forex brokers that quote currencies pair beyond the standard 4 and 2 decimal place to 5 and 3 decimal place. They are quoting fractional pips. So this information is not really that important, especially these fractional pips, but the knowledge too is still a good thing. So how to calculate pips? How to calculate value of pips? This one is very important, but in the video where we will enter the live chat, I'm going to be showing you how I calculate my pips under maybe 1 minute or under a second. Let me just use the right word, under a second or two, faster than all this calculation here. So as the terms and conditions related, blah blah blah. In this following example, you will see how the codes with 4 decimal places. So this is what I just want you to go through. Like, you can take your time and go through this stuff. I will show you how I calculate this easily on the chart. So I don't want the video to be that long. Do you get my point? So what is spread? This There's the bid and the price at which you sell the base currency. The ask is the price at which you buy the base currency. So the difference between the two price is known as spread. You know, the spread is the difference between price. Just like if you are on that's trading view, and maybe you've connected your broker to Xness or any other broker that you're using, and you want to trade. If you open your MetaTrader 5, you will see the spread. The spread that the broker is going to be giving you will be a slight difference from the actual price that it is in trading view. So that is how these people make their own money too. So this spread is the fee that's providing transaction immediate. So this is why the terms transaction cost and the ask and bid spread are are used interchangeably. So they are interchangeably. So instead of charging a separate fee for making a trade, the cost is built in the buy and sell price of the currency pair you want to trade. I don't know if you understand my point. So maybe you can still, do your research and try to get this part. But I'm just giving you the key things that are very important for you to understand as a beginner before you completely started trading. So margin means trading with leverage, which can increase risks and potential returns. This account of margin is usually a percentage of the size of the lot size of the forex positions, and will vary by forex brokers. In forex in forex markets, one margin is unusual, which means that traders can control $100,000 of currency with $1,000. So this is what they call margin, and it's just like trading with leverage, and that is the importance of forex. If you understand the power of leverage, so we're going to talk about leverage in the coming video, and how you can actually leverage to get more, like, to make more money for yourself. So sorry. So margin means trading with leverage. You can take your time to read that. And leverage, this is leverage which is used of borrowing money to invest, is very common in forex trading. By borrowing money from a broker, investor can trade larger positions in currencies. However, leverage is a double-headed sword, meaning it can also magnify losses. Just like the higher you risk, the higher you lose. So that's how the game is. So you can take your time and go through the leverage matter, but all these are just beginners terms like terminologies of trading. So not to get confused in it, that's why I'm making this video for the existing members and the new beginners and the newbie in the market. So this partner is very very important when it comes to economic indicator. What I want you to understand about economic indicator is news. I'll make a separate video in that's on a separate episode concerning news and technical analysis. Do you get my point? So me personally, my foundation is built purely on technical analysis. I'm a technical trader, you know. I trade purely on price action. Do you get my point? So the power of price action is something that it's you can once you've seen it, you can't unsee it. So that's the belief I had since I started out. So highly profitable. The process is highly profitable. You can make a lot of money and still risk little. But everything has to come with time and experience, and most especially discipline. So economic calendar, I just want you to know that these things exist in the market, just like news. And what am I talking about? An, an economic indicator is a piece of economic data, usually of microeconomy scale. This is used by analysts to interpret current or future investment possibilities. This indicator also help to judge the overall health of an economy. So all these things are just like speculators. Let me use the right word. So they use it to speculate the market and maybe the currency pair at the current price and the future price, but it does not guarantee anything in the market. So this is global events. Global events, so just like global events can be like news. Sorry, can be like election, war, all those things. Just like can immediately affect exchange rates and currency values due to the interconnectionness of the forex marketplace. So you can take your time and read this, and so market sentiment influence currency prices forex. So in the world of trading, in the world of forex trading, sentiment analysis plays a crucial role. This is where I'm talking about sentiment. So it plays a crucial role too, because anything you can imagine is real in the market. Do you get my point? So crucial role in providing traders with valuable insights into the market mood by analyzing news article, social media posts, and also sources traders can help them. So these are just, I'm just using this example to tell you that this market sentiment is actually another way of forecasting the market. That's people forecast the market with these three things, which is economic. People forecast the market with economic indicator, global events, and market sentiment. These are understanding market dynamics. But me personally, I am not going. I'm not going with markets with understanding market dynamics, because technical, pure technical trader. I don't know if you get my point. So we trade in sterling FX. We trade purely on what price action. Price action is the best. I don't really know, but price action is the best. That's what I'm using. So forex is commonly traded in specific amounts called lots. So basically, the number of currency units you will buy or sell a lot. That's a lot is a unit measuring a transaction amount. When you place order your or when you place order on your trading platform, orders are placed in sizes, quote in lot. So understanding this part too is it's okay, but you will not need to worry much about this, because obviously you're not starting out. Your aim should not be your aim should not be knowing how to maybe over leverage or what. So you just need to understand that there are standard lot size, there are mini lot size, there are micro lot size, and a nano lot size. So these are the things that you'll be very familiar with later on in later on if you are trading, when you start trading and when you fund your account. So this is another point I want to also talk about. There's information overload. The internet is full of trading strategies and advice which can confuse beginners and make it hard to succeed and make it hard to decide what to follow. One thing I want you to understand about this now is internet. There are so many billions of information there, but one thing that has actually even gotten me to this level fast was the part that I said in the episode 1, where I had to understand myself and I had to know my why. Then the how process is just like is less effective when you've understood your your why, and when you understand yourself. So me now understanding myself now, I knew that getting too much information, like that was when I was starting that. I used close to 8 months, like day in day out, studying about forex. But I just felt like it was not still adding up. So it's not really the information that you really have that will make you successful in the market. Most of the times it's just knowing the basic things, like just understanding yourself, and just like I said in episode 1, keep record of yourself. So all those things actually matter. So if you are jumping from, try to get this advice, get this mentor's advice, get this one, maybe if you just see someone that posts screenshots, you want to, all those things can actually confuse beginners. When you're making it will be hard for them to make the right, or it will be hard for them to make decisions to follow. So the tips that I want you to take out from this particular slide now is: one, no one can do it better than you. This is just like a slogan when it comes to this information overload. No one can do it better than you. You can have the one of the best strategy, and you'll not still be successful, because the moment you start seeking that maybe the moment you start seeking for more informations and more knowledge, you are just telling yourself that maybe you are not enough yet. Instead of understanding the basic things, which is understanding your why, be clear on your why, understand yourself, keep record of yourself, all those basic things. That's actually what is going to set you out for success when it comes to the market. I don't know if you get my point. Knowledge plays a long way, which is your how. But you cannot you cannot tell me that when knowledge, experience and time experience and time will still play a thing in the game, because you are a beginner. There are people that have been doing this thing for years and years and years and years. Your result is meant to be different from their result, which is why I'm just telling you this information overload. You don't need to be focused on so many things that happen in the internet, because it can make you make hard decisions. It can make you to get hard decisions, to make hard decisions. It will confuse beginners and make it hard to make to decide on what to do. I hope you are clear on that. So focusing, that's choosing the wrong broker. So just like I said in this video, I'll put a link on one of the best brokers that I've been using for close to 3 years now. So in case if you are watching, you should have the privilege to join the academy with the description. So just click on the link on the broker, then send a DM, and you get added to the community. So beginners might fall prey to fraudulent brokers or broker with high fee and unfavorable trading conditions. So choosing a forex broker will be the first crucial decisions you will make as a new trader. So this is why you need to always do your diligence. So this is why I'm providing our broker, that is the broker that I've been using for close to 3 years now. They are good, they are fast, their spreads are low, and things like that. You really have a good trading environment with them, trading experience with them. Sorry. So unrealistic expectations, yeah, a lot of people really, many beginners traders believe forex trading will make them rich quickly, leading to disappointment when this doesn't happen. I think we are clear in this. So unrealistic expectations. So know how to manage your expectations as a beginner, which is knowing your why, knowing yourself, and focus on the how process. Normally, if you know your why, you know that regardless of what will happen in the market, you are still going to proceed till you make. Once you proceed till you make it, once you proceed till you make it, it will look like a conflict. It's a conflict already. Then you go out for internal pursuit, which is the internal pursuit to make you to take action, which is each time you feel you want to take action, each time you feel you want to take action. That is the mindset so that you'll be able to see results. Remember, than you. Take notes. No one can do it better than you. These things are very, very important. These little things are very, very important. I'll be here to motivate you. I'll be here, every step of the way. I'm going to be here. So you just need to believe in the community and believe in yourself also, because we are doing this for you guys. I'm doing this video for you guys. So what people are saying about forex does not concern you. What people are saying does not matter, even from your love, even from your close ones or loved ones. I want you to understand this part, that when you start telling people now that you are doing forex, especially in Nigeria, they tend to tell you that maybe they tend to see you as someone that is rich, and maybe if your physical appearance does not match your personality, they tend to now start questioning you. So what people are saying, you don't think about that. Just forget about what they are saying and focus on yourself. No two leaves in no two leaves in the forex are the same. This thing is very, very important. This is like a proverb that if you believe it, things will start getting better for you. Just understand that no two leaves in the market, no two leaves in the forex are the same. People don't like losing money. That is a pain point. That's why they will tell you not to do forex, because it's very, very risky and the uncertainty there is too much. They are right, but what is the pain when there is no gain? So you can't get gain if there is no pain. And if you understand leverage, you understand that all it takes probably one good trade or three trades, and time. A time will come. I'm going to make a personal video where I had to travel from my, you know, when I was too curious to want to enter a trade, and now understanding when to enter a trade. Those things are things that I will share with you guys in this step of the way. So I just want you to know that from here now we are going to dive into the chart. So let's go. So talking about USD, we've been killing gold for some weeks right now. So I just want you to understand that this is how my chart is. And first now to talk about USD pips. Now let's say I want to let's say I want to show you how I calculate. I want to show you how I calculate these things so that you'll be able to see yourself. Yeah, so when it comes to calculating pips now, let's say you want to calculate your lot size. Why is this thing? Let's say you want to calculate your lot size now, and I post a signal and you want to enter a trade. This is 1228.1. This is one 1228.1. So I want to make you understand that if you divide this now times 10, this is 1000, that's 102.8. So this is 122 pips. When it comes to gold is measured in points, but this one now is pips. This is the pips value. So in case if I paste the signal, all you need to do is divide it by 10 to get the main pip value. So this is the fastest way to calculate pips when it comes to trading any market. This is the fastest way. So when you if you still do the point own, this point own now, if you do 12 point 12.281, this is 12.281 now. This one you have to times it. You times it by 10. You see that it's still the same thing. So you divide this one, you times this one, and same thing with the profit target to know how many pips you are going. You divide this one, you times this one. Then this is your 3 days to this is if you are running on this 3.14. So that is for pips. So that is how to calculate your lot size. That's how to calculate your stop loss. This is your stop loss. To know your stop loss. Then this is your target. This is your target. Then this part now is your this is your risk to reward ratio. So if you want to know how many pips now we are running, just like I posted this thing on yesterday, I took this trade from here, and now price is running. This is 5,000. So just use your calculator now. 5,000. This is 5,000. 5,001. 141.4. So this 1,141.4 now times, sorry, divide by 10. So you see that gold has been going 500 and something pips plus. Do you get my point? So gold has been going 500 and something pips. This is how you calculate these things easily on the chart. So not to waste much of your time, thank you for watching this video. I really appreciate it. I don't know if there's any other thing, but if there's any other thing, I'm going to add it up to I'm going to add it on the episode 3. So I just want to say thank you for watching. I really appreciate it. Bye.